Hi, good afternoon and good morning, everybody, and welcome to today's webinar on fighting retail fraud and increasing authorisation rates. I'm Gus Tomlinson, and I work as the General Manager of Identity and Fraud at GB Group, one of the leaders in identity data intelligence. And I'm thrilled today to be joined by two experts, Matthew Furno from our subgroup of Locate, and also Spencer McLean from one of our partners, Ekata. I'll hand over to both of them to give an introduction and also a bit of background on Locate and Ekata. Matthew, over to you.
Thanks, Gus. So yeah, Matthew Furno, Commercial Director at Locate. So in a nutshell, what does Locate do? Well, it's that clever little bit of software that sits on an e-commerce page at the point where a customer checks out and you want them to enter their address quickly and accurately. Well, that's what Locate does, but it does it for every country in the world, so helping to deliver a fantastic customer experience and amazing location data to the retailer.
And I'm Spencer McLean. Thank you for joining us today, everybody. I am General Manager of Ekata's office in EMEA. We're here in Amsterdam, and Ekata helps e-commerce companies, financial institutions, online gambling companies understand the risk behind phones, addresses, emails, and IP addresses, the fraud risk worldwide. I'm very excited to be here with GB Group talking to you about fraud trends, authorization rates, and other topics today.
Great, thanks both. So before we start and get the input from Matthew and Spencer, we wanted to pose a question to you all. And that is, do you think over the past 120 days, as a result of COVID and everything that's happened, the level of retail fraud has actually increased for your business? Hopefully you'll all be able to input, and I'll see those results as they come through. A little bit of housekeeping as well, that we will be doing a Q&A at the end of this webinar, so please do put in questions as we go through. So interesting, yes being the answer. Something I've seen across social media, publications, and from a lot of the analysts is this rise of fraud, but actually I'm gonna hopefully bust a few of those myths in terms of increased fraud within the e-commerce world, and Matthew and Spencer will help me do that. First of all, if we can hand over to Spencer to give you a little bit of background on that evolution of fraud within the e-commerce sector.
Thanks, Gus. So I want to start with a framework that we talk about a lot at Ekata, and that's really the evolution of fraud over the years and what we call the fraud 1.0 era. And this really started, back when Amazon started doing business back in the 90s. The fraud checks that were available were address verification. And it's not an accident that they were the first thing. That's what data was available at the time because the credit bureaus had that data. Much of your credit back then was derived from a mortgage. And as such, you really could only verify transactions or applications in mature credit markets. Now, as time went on and we entered the fraud 2.0 world around 2005, you began to be able to make a full-time living as a fraudster. It was a full-time job. This was the time where a lot of the fraud platforms were founded. They were primarily based on rule-based decisioning and simple point elements that you could write rules around. And then as we keep moving forward, today what we call a fraud 3.0 world, which is truly organized crime. Cloud computing is mainstream. Fraudsters have immense computing power at their fingertips for free, not twice as much, not 5 times as much. They have an order of magnitude or two more computing power. They don't just go, run a few stolen credit cards through they bought on the dark web. They're buying hundreds of thousands of credit card numbers and running parallel processes across a huge number of machines. They are going to break the system, a rules-based system specifically. It's just a matter of time. And so in response to this, many of you on the webinar today are probably already running machine learning models, or you're looking to do that. And the only way to answer this new fraudster is to build a very powerful decisioning mechanism, which needs to be fed with a lot of different data to be precise on decisioning.
Thanks, Spencer. I think that whole we're in the era of industrialization of fraud is a really key point. And we know that from working with multiple partners that address verification piece also remains still at the foundation when we look at having good quality data. So we know that fraud is right, but what's actually happening with the trends that we're seeing across the e-commerce platforms, Matthew?
Yeah, thanks, Gus, and that was a great introduction, Spencer, to the fraud aspect. So what we're seeing on screen is the transactions and traffic that we observed across the Locate platform, and by that we mean the 15,000 or so customers that have got Locate technology at the checkout on their e-commerce platform. Now, you'll have seen a version of this slide probably in countless webinars over the last number of days. So what's the context to what we're seeing here? Well, we probably all know that e-commerce is by and large relatively predictable. It's impacted by weather, seasons, holidays, and then the super retail events. Started with Black Friday, gave rise to Cyber Monday. Suddenly it was a week, it was a fortnight, Singles Day, Prime Day, and so on. So e-commerce providers recognize that there are cadences in their annual trends, and they're able to prepare for them. And in preparing for them, they know that those spikes, those surges of activity, firstly, they're predictable, and secondly, they know that their platforms are going to run white hot, that logistics are going to be tested to the limit. It's even more important to get the basics right during those surges, to know your customer's location and address, to create a fantastic customer experience, but also to recognize that during those surges, which have typically only happened at set periods, you've got vulnerabilities potentially being created. And where there are vulnerabilities, then bad actors, fraudsters are going to try and exploit those vulnerabilities. So retailers know they need to get the basics right during these known spikes and surges. So what happened over the last 3 months in many markets around the world? Well, when lockdown kicked in, and lockdowns obviously came in different phases in different parts of the world. In the UK, we see that it came in on the 23rd of March, a little earlier and later, different parts of Europe, in the States, state by state. But what we saw, and we've all recognized this, was this incredible surge. In our kind of language, that was Cyber Monday, every day in, day out, for weeks on end. But not all e-commerce providers or retailers were faring equally. Some examples of that might be that lower cost items, such as maybe fast fashion items, were through the floor, that was dying, whereas larger value items for the home, for the garden, home electrical items, well, these were soaring. So the value of goods being bought online and the level of transactions were both in absolute surge territory. So it was interesting to observe some of the phases that came into play throughout lockdown as consumers, and this was a consumer-led set of phases. We're doing different things, and yet, unarguably, they're online in far greater numbers, largely because that was their only opportunity to engage in commerce. So what was caused by a global pandemic, and whenever we talk about this topic, we should never lose sight of the fact that there was a pandemic, there is one, and it affects people in a very real and human way. Actually, what we're seeing is 3 to 5 years at least of predicted e-commerce growth compressed into just 2 or 3 months. When you let that settle, the effect of that is absolutely seismic. When you could have predicted what was coming over a period of years and had to deal with that in such a short period of time. And whilst we've seen stores reopening, we've seen that in the States, stores reopened in the UK on the 15th of June, which was just yesterday. We're seeing a little tail off, but we're predicting that that level of surge and compressed growth is going to continue. So what we can say is that with that continuing growth, that continuing surge, that retailers are going to have to continue to scale accordingly to meet this increased demand. But it might be that there's more to the numbers than meets the eye, but this is the trends that we're observing over this period.
That's really interesting. Thanks, Matthew. And I suppose something that is also happening, that compression of e-commerce growth and that scale isn't just coming from the same retail shoppers as we would normally see in a Black Friday situation.
No, I think it's interesting to look in a bit deeper into the mix of customers that have come online. Now, over the last 120 days, everyone's been online because there was no choice. But actually, when you look a little bit deeper, your typical e-commerce customer fitted into a number of fairly well understood demographics. And whilst demographics are generalized, so you can't say this exclusively, the cohort or the demographic that was least likely to be online were the older demographic, the older cohort. Now, as one analyst put it to us, under duress, this cohort had to come online. If they wanted to buy something, they had to do it via e-commerce. Now, the interesting thing about that cohort, we've nicknamed them Generation Zoom. Why are we doing that? Well, I think about my dad, 82, terrible at technology, and yet we've got him on Zoom talking to us every week during the lockdown. So older people, less tech savvy people who never really wanted to engage in e-commerce have had to, and maybe now will choose to by virtue of public health or public safety concerns about the environment outside, choosing to remain engaged with e-commerce. So PayPal recognized that. They saw this enormous uptick, 65% increase in online shoppers over the age of 50, which hopefully isn't how we count being old these days, but we're seeing that cohort growing. So we would advise retailers just to look a bit more closely at the figures, look a bit more closely at who their customers are, because if that older cohort stay around, they're often on pensions, which are more predictable and consistent. They're more loyal. They're often prepared to pay more for better value. And so they may be customers that you really want to hold on to.
It's really interesting. We've had this sort of digitalization globally, and everybody's been prepared and has predicted Generation Z and Y, but I don't think anybody could have predicted. I certainly never predicted that my grandparents would be using Zoom and buying things online. So Spencer, we've got this huge compression of growth. We've got this spike in volume. We've got these new digital shoppers. We heard before that 67% of you today listening think that fraud has increased. It would be great to get your insight in what you're seeing on the Ekata platform.
Yeah, I'm happy to do that. And when you look at the volume increase in e-commerce, outside of travel and hospitality, virtually all of our e-commerce are up and up big, and we expect some of that volume to be retained even post-COVID, and we'll talk a little bit about that later. Just a little bit of context, our solution, again, assesses the risk of an identity, looking at the name, address, phone, email, and IP. And we have a lot of data elements we return, but the one I want to highlight for this slide on the next one is our confidence score, which is the overall risk score of an identity. And what I want to challenge a little bit is, while the overall fraud rate in terms of pounds or dollars or euros or whatever metric you want to look at, while the overall fraud amount is going up, the percentage of fraud during this time is likely going down. And what we're seeing here on this slide is our average confidence scores globally across the last 4 or 5 months, and you can see the overlay of different events. So as time goes on, and we get on average the confidence score is around 310, 320 pre-COVID, but then once the world realizes that the pandemic is real and we do need to go into lockdown and we can't just keep ignoring it, what we see here is that the average risk of the users we're seeing in our system goes down significantly. The average score after New York City shuts down on March the 22nd is around 270 points, and that goes down from a 0 to 500 scale. I mean, we're losing about 50 points on average, which is about 10%. And so if you look at your fraud rate, if you're a merchant and you're looking at your fraud rate, your average fraud rates are likely going down, like in terms of percentage of overall transactions, or percentage of pounds that are running the platform. And that's a key takeaway that we want the audience to walk away from this webinar with, is that just because volume's up doesn't mean that you necessarily are experiencing a lot more risk. And when we look at that Generation Zoom, that population is incredibly loyal. And if you're able to give them a good customer experience while mitigating your own fraud risk, which you have to do as part of your business, but if you're able to give them a good customer experience, they will stay loyal to you. And a lot of them will continue shopping online. They'll embrace the convenience of online shopping. And that's just something you should think about. And when we overlay the average scores over the holiday season on this next slide, which is a period of great spikes that we'll see, that a lot of retailers see every year, you can see that here in orange is our COVID traffic, that same graph, just spread out a little bit more, and blue is Black Friday and Cyber Monday. You can see the clear spikes on the right side of the graph downwards. The risk level we're seeing during COVID is similar to what we see in the holiday season, which again is probably something you're familiar with as a retailer. A lot of retailers we know ease their rule sets during the holiday season to deal with increased volume, and that's something that you might want to do during COVID. But stay ever vigilant. Fraud is still out there, and when we're looking at that fraud 3.0 metric that I shared earlier, the fraud attacks are getting more and more sophisticated and rely on more data, both internal and external, to really make accurate decisions.
Fantastic, thanks, Spencer. I suppose then what I'd like to do is pose another question to the audience and kind of say, we are in this world where every transaction matters. We've got new generations shopping online. We've got higher competition with more people than ever selling goods online. What are your investment priorities over the next 12 months? Is it customer experience, fraud reduction, or are you finding that in your plan you've got that balance of both? Again, I'd also remind you, if you've got any questions, please do pop them in the Q&A, because we'll have time to get Spencer and Matthew's view on those at the end of this. Great. So actually, it's customer experience or both, which is really fascinating. If we look to a study actually that Ekata did, that reaction of making sure that we both have the demand of consumers having the frictionless experience but also trust is front of mind. So really interesting that 54% of you are saying that getting that balance between friction and fraud is key. Spencer, it would be really good to kind of get your view on that challenge in terms of balancing friction and fraud.
Yeah, and it is the classic conundrum, and I'm really refreshed to see those survey results, because a lot of the times when we talk to retailers, they're so hyper focused on fraud that they're not cognizant of the fact that they may be declining good customers. Later in the presentation, we'll be sharing some practical recommendations on how you can track that I think you'll find valuable. But again, with the generation Zoom and just customer experience in general is paramount, because the options that consumers have is just staggering, and brand loyalty doesn't happen by default. You don't have a monopoly on the goods you're selling typically, and so you need to treat your customers right, both upfront with your fraud prevention strategies and then downstream with customer service, shipping. I mean, virtually everything you do needs to have the customer experience in mind, and I'm glad that the audience already agrees with that.
Right. Okay, so if we look at the situation we're in and we go to kind of the challenges that we face in this world of making sure you've got this fantastic customer experience, but also you're stopping any of the bad transactions and also bad behaviours. Matthew, what's the key challenge that we're seeing across our e-commerce customer base from a Locate perspective?
Yeah, I think thinking back to the previous slide, that 92% of customers are demanding a friction-free experience. I'm just amazed that there's 8% that don't want a friction-free experience. My experience, everybody wants to be able to get through their online journey in the quickest, easiest, and most convenient way for them. But ultimately, what's the customer's perspective? Well, if we think about our view of that, a customer comes onto a site, they want to buy a new pair of trainers or something for the home, they care about the choice, the selection, and getting through that process as quickly as possible, then they're excited. So what needs to be right is the data that's going to underpin fulfilling that customer experience. And I think right at the top, Spencer was talking about how the fraud journey started with an address, and the address still plays an absolutely critical role in fulfilling the customer expectations. You buy something, you need to know where that customer is so that you can deliver to them. And therefore the address, the location is absolutely critical to that, but making that possible through a really slick, friction-free customer experience. As we've just seen in the poll, people on this call and consumers more widely, they're demanding that slick customer experience.
Absolutely. And Spencer, that key challenge for Ekata and customers?
It's really about understanding new customers, right? So let me pose a scenario. You have, you're an electronics retailer and you encounter a new customer. That's great, right? But they bought a 5,000 pound flat screen TV. Like, how do you know that that's a good customer or bad if that customer has no history with you? And you know, maybe your fraud provider doesn't know anything about them. And understanding those unknowns from an identity standpoint is what we help with. And, you know, Locate and Ekata fill two key layers in the puzzle, and later on we'll talk a little bit about some more layers that you might be considering, but it's really about leveraging data, both internal and external, to make the most accurate decisions. And when you're encountering new customers, and again, Generation Zoom is a perfect example of that, is being comfortable with the risk associated with the unknown at the end of the day.
exactly. I think it's that point of how do you establish trust, both through our customers trusting the consumer, but also the consumer trusting the customers with that experience. Spencer, it would be really interesting to kind of learn more how Ekata balance that and how you balance fraud with acceptance.
Absolutely. So fraud's not going away. On this slide, you're seeing card fraud from the Nielsen report, the forecast of fraud over the next 7 years or so. Card fraud is increasing year over year. And while it might be increasing less in some markets as a result of regulations, and it'll be interesting to see how PSD2 plays out, at the end of the year, going into next year, and what that's going to do. But the reality is like these fraudsters are going to find a way through, and fraud is going to go up constantly. And while all of us on this webinar are more interested in customer experience, which is great, and I think that's a really positive thing, you still certainly care about maintaining your metrics and keeping your fraud rate low. And so on the right side of the slide, you see what we at Ekata view as one of the final frontiers of business problems in the industry, which is, hey, if you're a retailer and you sell in-store and you sell online, 98% of your in-store transactions are authorized by your issuer, and only 82% on average globally are authorized by your issuer for card not present transactions. And the reason why that is because just like you, the merchant, might have fear of the unknown, the issuer does too. When I moved to Europe, I got so many declines on my American credit card because it wasn't normal for me to be buying, 500 Eurostar tickets to go from London to Amsterdam. It wasn't normal, and so my issuer declined me. And so a big thing we're seeing in the industry is this shift of risk assessment from post-authorization to pre-authorization. And a lot of that is, one, to improve the customer experience, because it gives you a lot more options if you do that prior to authorization. You can do a lot of interesting dynamic things by understanding risk at various stages of the journey. And then the other piece is, helping the issuers make better decisions, which is something that PSD2 helps us with, and I'll touch on that a little bit more later. On the following slide, I just want to dive a little bit into false positives. So customer experience is king. And the most important thing to know is that declines are 3 times the rate of card fraud, right? I think, because a lot of you are optimizing customer experience, like this isn't going to be a huge surprise to you, but the magnitude of customer insult, as we call it in the industry a lot, like that's a problem. Like consumers, when they're declined either by the retailer themselves or by the issuer, they will either stop shopping with that retailer 32% of the time, according to the Javelin report, or they'll stop using the credit card entirely. They put that credit card in the back of their wallet. And so the retailers and the issuers have aligned goals, which I think a lot of you might be surprised to hear, because if you're a retailer, you might view the issuers as the enemy in some cases. But no one wants to decline good customers. Yet 15% of cardholders have transactions declined. And so, how can I mitigate this strategy as a retailer? And really what it boils down to, and if you're investing in customer experience, you're probably already doing some of this, but tracking your declines and understanding, hey, are there any good customers in there? And there's a few ways you can do that I'll touch on briefly before we move on. One would be relying on call center feedback. So, if I buy something from ASOS, for example, and it's declined, I might call in because I want to get that product. And if the call center feeds that data back to the fraud team, you can use that as a feedback mechanism. 2 would be use your manual review team, if you have one. Put more senior agents on the rejected orders and review those again to try to save some of those transactions. And then 3, if you have an appetite for it, you can create a control group, which means taking a subset of your rejects and accepting those and seeing what happens, seeing what percentage of those return to fraud. It's an expensive strategy, to be sure, and it opens you up to some chargeback risk. But ultimately, what Locate and Ekata agree on is that having good data is key, and having good outcome data is just part of that. And if you're not thinking about your false positives, you're not going to be able to properly invest in customer experience. And that's something that we would like you to consider.
Great, thanks, Spencer. I think it is that point, absolutely, where data tells a story, and we see it across location, across identity, and across fraud. And that the more data you're feeding back in, the better output you're ultimately going to get. And that kind of leads me on to your next point, which is around that data sharing ecosystem between the merchant and the issuer response.
Yeah, so ultimately, when we go back to that authorization rate problem, the 82% card not present versus 98% card present, the core of that issue is because very little data is shared as part of the authorization message. The rails were not built for card not present transactions. They were built for card present transactions, and virtually nothing is passed down, right? Your issuer, assuming that the transaction doesn't go to 3D Secure, which we can touch on briefly, but your issuer is only getting, the amount of the transaction, the merchant ID, the expiration date, maybe the CVV if you're accepting that, and very little else. And so they make decisions. The issuers make decisions based on the history of the account, the behavior of me as a consumer. And so now that I'm living in Europe, yeah, I can use my American card all the time because Bank of America figured out that I live here. Although in Amsterdam you can't use Visa cards or MasterCards very much, but that's a separate thing entirely. Versus as a merchant, you have so much data. You have an incredible amount of data, very rich data that you can make decisions off of. And you should really embrace that data and really understand it, both internally and externally. And then if you consider now starting to assess a risk pre-authorization, you'll be poised to help these issuers make better decisions once PSD2 is rolled out and adopted more broadly. Because basically, PSD2 allows you as a merchant to work closely with your payment processors and pass down your recommendation to the issuer. Is this transaction good or bad, in the form of the transaction risk analysis as part of PSD2? And so this will be a long-term benefit that you can realize as a merchant if, one, you invest in a strategy that leverages data, and two, you invest in a strategy where you make decisions pre-authorization that requires you to partner with people that are able to give you intelligence in under a couple hundred milliseconds, so you can still maximize that consumer experience at the end of the day.
Absolutely. I think that a strategy that invests in data is absolutely key. And I think when we look at data holistically as GBG, it's not just one type of data as well. And it's not just one type of partner or one type of technology. It really is getting that holistic approach in terms of how you approach a problem and making sure you've got all of the different pieces. It would be great to hear from both Matthew and Spencer actually in terms of that holistic ecosystem. And maybe Matthew, if we head to you first in terms of the role that location plays in that.
Yeah, so we see that location, if you looked at the graph as a build, the foundation stone, as I might put it, of location, it's the thing that the customer is likely sharing with you if they've ordered something tangible to be shipped. So you need that address in order to be able to fulfill customer expectation. But it gives you that starting point, that foundation slab, in order to start building additional characteristics about the customer. And at the point where the customer is revealing the things that you need from them and they're willing to give in order to complete their transaction, whether it's their mobile phone number, their email address, their physical address, and are appreciating that Locate's able to ensure that that information is valid, accurate, and good to use. At the same time, in that pre-authorization mode, we're able to start using that data as the way to build up that rapidly calculated but real-time pre-authorization check. So we start with the Locate piece. I think that's why Ekata and Locate work so neatly together. But of course, then we see this rules-based approach that builds up from that starting point of location.
Exactly. And then Spencer, the entity relationship graph, where that steps in.
Yeah, so ultimately fraud prevention requires a layered approach. And I think it's doing us a disservice if we just call it fraud prevention, because these layers can also help you identify good traffic, right? And so, it's not normal when you think of Locate helping normalize and standardize addresses and make sure things are deliverable. It's not normal for, someone to order a pair of trainers 100 times at the same address, but there might be minor permutations in that address to, get past velocity checks. And that's where data cleansing comes in, right? And then as you go up, there's other layers. You can think of fraud prevention and these layers as like Swiss cheese, if you will. Like the Swiss cheese has these little holes in them, and the fraudsters are going to find those holes. And the more layers you implement, the more you're going to be successfully be able to block those people. And so for us, when it comes to the entity relationship graph, it's understanding how different data elements are tied together. And so you're probably doing this internally with different orders, right? You might have the same credit card number across multiple orders. You're looking at how that graph compares to each other. And so Ekata is another example where we help people understand how names, phones, addresses, emails are tied together globally. And so, when you think about your fraud prevention strategy and your customer experience strategy, look for partners that are able to help you both identify fraud and good customers, and make sure that you implement enough layers that you're going to be able to optimize your KPIs to the levels that you're comfortable with.
That's great. Thanks, Spencer. I think if I kind of reflect back on what you and Matthew have both talked about, it really comes to making sure you're using that data, sharing that data with the right partners to get the right results, and really importantly, taking that layered approach and making sure you're not just focusing on fraud, but how that data and how that technology can make sure you've got the best customer onboarding experience and you're creating that trust with your customers. Really mindful of time. It seems to have absolutely flown. We've got a couple of last points where I'd really like to get that insight from Matthew, yourself and Spencer in terms of what you think the response to the changing environment should be. And then we'll wrap up with some questions. So Matthew, over to you first.
Yeah, thanks, Gus. So I think the 3 points I'd like to sort of send the audience away with were all touched on when we were examining the trend analysis over the last 3 months or so. I think 3 situations and 3 sort of responses and interventions. The first is think about scale. 3 to 5, even more, some have suggested years of compressed e-commerce growth, which we expected to happen anyway, but over a period of time we could plan for in a much more predictable way. With that level of scale, we've got to make sure that we're ready to scale up, and not just for the spikes and the surges that we see occasionally, but predictably, but being able to do that over an extended and probably unended period of time to scale up to manage that higher e-commerce traffic. I think secondly, we touched on phases. It was clear throughout the various lockdowns and stay-at-home orders that consumers acted in what started to look like quite clear phases, whether it was buying the equipment they needed to work from home, the equipment they needed to homeschool their children, luxury items, alcohol, more food, all the things that were comfort items to deal with the situation that people found themselves in. Those phases now, as we look back at them in hindsight, it's probably a sad reality that we'll end up going back into a cyclical approach to this pandemic, and we're already seeing that in China during the course of this week with a re-emergence of the pandemic in Beijing. So think about the phases that existed, use those to model and look forward. And then thirdly, just continue to get the basics right. Customers still want a clean, quick, convenient experience online. And whilst retailers have got to be doing a lot of work behind the scenes to make sure that the bad actors stay off, that the bad transactions stay out of your books, get the basics right, gather the right information to give the customer a great experience, but make sure if they bought something from you that they're going to receive it nice and quickly and be a happy and satisfied customer.
That's great. Thanks, Matthew. And Spencer, your kind of key takeouts?
Yeah, for us, track your false positives. Very few merchants actually do it, in my experience. And start with a call center feedback if that's what you need to start with. It's a step in the right direction, but think about maybe the idea of using a control group. Maybe a bit controversial, but the data is the most accurate. It's truth data. And if you're declining your customers, you might be, committing customer insult. When it comes to PSD2, I would say start investing now. The merchants who have a pre-authorization strategy already are going to be able to optimize their KPIs the best in a PSD2 environment next year, and we'll be able to give these recommendations to the issuers. And you're able to do so many more creative things, like dynamic promotions, for example, as some of our customers do, not with our data, but separately, which I find quite fascinating. And then, consider the layered approach. You need both good internal data, clean internal data, and when you have a new customer, external data can help you understand those people. And then one last thing I want to leave you with is, when a lot of merchants in Black Friday and Cyber Monday in the holiday season, they adjust their systems to deal with those surges in volumes. And so they use their rule sets to ultimately reduce the percentage of transactions that are going to manual review. And so if, God forbid, we see another spike and in cases in Europe, and people continue working from home and e-commerce is staying at this level, you can adjust your your rules, your models to allow more good customers through quicker, right? Optimizing that customer experience. And then, when it comes to manual review, if you're unable to keep up with that, prioritize the highest risk transactions. And if you need to, a lot of merchants we work with do this. If you need to, you can consider bulk releasing the remaining orders at the end of each workday versus letting those orders sit in your warehouse unshipped in the case of physical goods. So those are some of the recommendations that we'd like to leave you with at Ekata.
That's great. Thanks, Spencer. I think if I kind of sum it up, that need for easy, quick and convenient e-commerce with that layer of trust underneath. And I think from both of you today, making sure data is not just input into systems, but it's almost like we're listening to it, reacting to it and being proactive to any of these changes. I've certainly found that really interesting. Over to Q&A, and we've actually had quite a few questions coming through, so apologies, I'm going to have to look through when I scroll through these. A really easy one for me to just start with is the slides won't be circulated, but the recording will be shared within the next 24 hours, so that will be there for all of you as a piece of resource. Spencer, you talk about the importance of understanding new customers. Do you feel that tolerances should be relaxed even though the risk of fraud with new users is still unknown?
I would say yes overall, because when you think of the increase in volume, the vast majority of the new customers are good, right? And so, you shouldn't put up the same blockers that you would when we're not dealing with these volume spikes. And you see the same thing during the holiday season. However, you need to acknowledge that new customers to your business are higher risk, and you should, look for passive authentication methods, like Locate and Ekata perhaps, but other methods as well, to be able to screen those and be comfortable with those, but without introducing unnecessary friction.
That's great, thanks. Also, a bit of a comment here. In the past, most EU issuers have refused to support AVS. Most EU acquirers did not support AVS even for US and UK issued cards. While PSD2 will help here for intra-EU transactions, it's still not going to be easy to send that data to US issuers. Do you know of any developments here, or how are Ekata keeping on top of that?
Yeah, so the thing is while PSD2 is a step in the right direction, the reality is the authorization rails are so fundamentally flawed in a way for card not present transactions that there just isn't enough space in the rails, and you can't just introduce more bytes into that process to pass down more data. And so the only data you're going to be able to consistently pass down to the issuer is the transaction risk analysis, but beyond what you're already passing down to them. The TRA is part of PSD2. They made space for that in the authorization message. Now, that's for European transactions. The other thing is, when 3D Secure 2 is broadly adopted at the issuer level, which will happen sooner in Europe than it does in the United States, but the US will follow Europe over time. If you understand which issuers are leveraging 3DS2 properly, you can use that as a mechanism to send them more data. But you also need to acknowledge, and we'll go down the 3D Secure rabbit hole a little bit, and then I'll stop. You also need to acknowledge that, a lot of issuers treat 3D Secure as a risk because merchants, especially American merchants, have abused it, and they've only sent really risky traffic through 3D Secure. And so issuers are like, this merchant is sending me their bad traffic only. And so that paradigm needs to shift to more broad adoption. So I would say embrace data sharing mechanisms beyond just TRA and PSD2, but acknowledge some of the flaws with 3D Secure, and initiate a tracking project where you understand on an issuer by issuer basis how they are treating your volume, and your acquirer, if they're a good one, they can ultimately help you with that.
That's great, thank you. Another one here, Spencer, all around false positives. There are two sources of false positives: the merchant's fraud scrubbing and the issuers. While the merchant can tune his or her gateway's fraud scrubbing system, there doesn't seem to be, or they can't see any mechanism for feedback to the issuer. Is there any kind of solution here in terms of that sharing of false positives?
So not something that every merchant can do, unfortunately. There are merchants that have successfully developed an issuer outreach program, if you will. Netflix and Microsoft are two big examples where they work directly with the issuers to have the issuers better understand their traffic. The benefit that every merchant can see from initiating pre-authorization strategy is that more good traffic will be sent to the issuer. Like, you'll be stopping the bad traffic up front, and over time, the data savvy issuers, and the biggest ones are more data savvy than others, the data savvy issuers will authorize more of your transactions over time if you're blocking the bad transactions up front. But unfortunately, working directly with issuers is not a scalable solution, although the card schemes are working on cracking down on the use of do not honor, which will give, which is a decline code from the issuers that they abuse. So that will, once that crackdown is effective, like, you'll start getting a little bit more granularity on the declines. And then if you do know that the issuer declined a good customer, I know of some merchants that reach out to those consumers proactively and they offer them alternative payment methods. Klarna, Ideal in the Netherlands, to give them a way to save that transaction. But at the end of the day, you can't force the issuers to do anything, but there's some of these tips and tricks that you can do to kind of optimize the system a little bit.
That's great. I think we've probably got time for one more question, maybe two. Matthew, are there any examples of e-commerce providers who have employed your 3 tips, or even some of them, and can you share?
Yeah, I think we've seen loads of really great examples over the last few months of retailers that have really stepped up. Obviously, some have found it harder than others. UK brand Gymshark. Gymshark are a really exciting young company in the fitness wear industry. They've always maintained a really close proximity to their customers, really socially native, and have gone cross-border almost effortlessly. So I observed what they did during the lockdown and the pandemic. They scaled very quickly. They were able to maintain extraordinary levels of capacity right from the outset and keep that going through as people at home were buying leisure wear in greater quantities than before. They recognized the phases. They were very good at recognizing the phases and making stock available. They rebranded their company to Home Shark at one time to reflect on the fact people were exercising at home, not going to the gym because they couldn't. So they kept that real closeness with the customer, predicting the phases as they came and doing that really well. And then finally, they didn't lose sight of the basics. When people were buying items to maybe exercise at home or just be comfortable, they were making sure that their logistics, their data acquisition from their customer, location, address quality, making that customer experience really intuitive and slick and friction-free, and never skipped a beat. So there's plenty of other examples, but I think Gymshark did an exceptional job.
Yeah, no, that's great. And I'm a Gymshark customer, so I can say I did have the Home Shark, so very good. Okay, that's brilliant. I think we're kind of almost up to time. So I just want to thank everybody for joining today and taking your time out. And also a special thanks to both Matthew and Spencer. I know that every time I speak to both of you, I learn a little bit of something about location and fraud in the e-commerce world. So I'm sure everybody listening to has as well. So thank you, everybody. Stay safe.
Thank you.
Thanks.